Hello everyone, this is Lito and this is the second Cryptotesters live stream. And today I have with me Julian Ko, the founder of Ribbon.finance. And I'm super happy to have him on because the purpose of this live stream is basically to always have the hottest, the most trending, the most upcoming products in the DeFi space on. And I think Ribbon really fits all of these criteria. So with that being said, welcome, Julian. Where's your ribbon hat?
I did not bring it. I was actually thinking of bringing it, but I forgot.
You should have. That's some massive flex. How much are these worth nowadays?
So someone bought it OTC for like 10K. That's the last I've heard of it. And I mean, it sort of had this cult-like following right now. So I don't know what it's worth right now, but I'm never gonna sell mine.
Yeah, for sure. Yeah, I saw that on Twitter with the OTC market. How does that even work? Like, who are the buyers? Who are the sellers? How do they find each other?
Yeah, so people who own this hat also have like this R hat token that we minted like 64 of. So people are just trading these things OTC using AirSwap, and they're having all these like secret deals to figure out how much they're actually worth. So yeah, it's just interesting to see that people actually want to trade this stuff.
For sure. Yeah, these collectibles always end up costing a lot. It's really good investment. But yeah, we'll talk more about the airdrop later because I think it's a very funny story in and of itself. And the ribbon cap is related to the airdrop. But first things first, let's start with you. I know you started your crypto career at Coinbase. Tell us a little bit about that.
Yeah, so I went to college in the US. I went to Cornell, and there's this very strong crypto group there. So I was pretty close with all the academics there. And I sort of dropped out after 2.5 years to go work at Coinbase. So at that time, they were building out like this new staking team because all these new proof of stake chains were launching. Tezos just launched, Cosmos was launching, and obviously now, like every other chain is proof of stake. So Coinbase was thinking of like building this in-house team to run like these validators for these projects. And at that time, I was doing like some random work for the Tezos Foundation. So I was linked up with some of these folks, and yeah, I mean, it sounded interesting. So I decided to join that team specifically and my first project was like to work on building a Cosmos validator. Yeah, I mean, it's been pretty fun, and I just checked recently. I think it's like the top 10 now. So it's also sort of it's grown quite a lot.
So that's the team building the proof of or the staking feature for Coinbase today, I imagine.
Yep. So right now, I mean, back then it was like Tezos and Cosmos. That's basically it. But now they have like all sorts of stuff, including like ETH2, which is coming soon. I haven't followed exactly what they've been working on, but yeah, that was the team I was part of at Coinbase.
Yeah. And so you work basically at this massive unicorn company in crypto, probably the best company to work at, but you decided that you wanted to leave. I guess you looked at the DeFi space and how much it's growing. What made you want to leave and found Ribbon?
Yeah, so I mean, even I think while I was at Coinbase, my current co-founder and we've just been like hacking on things for like many years. And one of the things we've been doing on the side for quite a while is just like on-chain liquidations, on-chain arbitrage type things. So basically the whole field of MEV now, we were part of it early on. And I mean, it was like super interesting intellectually. There are all these like cool mempool games and all these cool new things coming up. And I think, we just had a lot of fun doing it. And one of the projects that we were sort of trying to arbitrage was like Open. Open had just launched like their options protocol, and there was this like weird price discrepancy where like Open used American options, which should trade more than European options, but it was trading at a discount to Deribit. So we were like, okay, this is free money. Let's go try and arbitrage this stuff. So that was really our first experience with like options, and I think we over time we did that, and we did a few other things, and I think we figured out like instead of just running our own little strategies from our bedroom, maybe we should like productize some of this stuff. It is very similar to Andre's story, where he was building this yield aggregator for himself, but he felt like, okay, let's go build it for everyone else. So I think we were quite inspired by that, and obviously the whole DeFi space went crazy, so felt like it was a good time to do something new.
Yeah, that makes a lot of sense. I mean, something that you like to use, probably there's some other people that would want to use that as well.
Exactly.
And so how has it been since then? I think, so when did you start building it? How has the journey been so far?
So we started it like November of last year. I think the broad goal was like, there are all these new DeFi yield aggregators, but all of them are sort of focused on farming and dumping coins. So even Yearn, like most of the yield comes from farming these coins and dumping them back to like USD or something. And I think we felt like, I don't think that's like the future of finance, farming and dumping random coins. So we were thinking, okay, probably the future of finance would be more rooted in like real financial instruments, like options, like other derivatives. And we were thinking, okay, what could that look like if it wasn't just farming coins, but it's running some sort of derivative strategy? So I think that was like the main motivation behind starting it. And yeah, I mean, it's been going pretty well. Our TVL has been growing a lot. Yeah, I am pretty happy with our progress so far.
Yeah, that's what I like about Ribbon as well. I think we see a lot of like 1 to N development in the space where, you know, there's like a new yield farm that does the same thing as Yearn, but they have their own token or something, or another, you know, lending protocol. Whereas you guys are really going, more or 0 to 1, like building a completely new primitive that hasn't existed, and the success shows that it's working well. So tell us a little bit. What would you say is the USP of Ribbon?
Yeah, so I think maybe just stepping back a bit, like our main products, we call these things option vaults, which is basically you put your money in this contract, and the contract would go and run like an option strategy for you. In this case, the first option vaults that we have created are yield generation strategies. So one of the ways that you can use options is actually to generate yield. Most people on like Robinhood or whatever, they gamble with options by just buying call options, which basically says like, okay, you spend like $100 on this GME call option, and if GME moons, you get paid out a lot. But on the flip side of that, someone is selling you that call option, and he's getting paid like some yield for that. So we are mostly focused on that sell side of things. I think we felt like DeFi people generally just love yield. So just the idea of like, okay, we are building a new type of yield source is interesting. So we are focused on this option selling to generate yield. And I think you can go and run this strategy yourself on Open or on some other platform, but it's super gas intensive. Maybe you want to copy our strategy exactly. You have to go like do a transaction every week. You have to like deposit, withdraw, do a sale, do like maybe 4 or 5 transactions every single week. And 2 months ago, gas was like so expensive, and it's just impossible to run yourself if you're a small person.
In that sense, again, there's a parallel with Yearn in that like the vaults of Yearn, the main idea was that users wouldn't want to like yield farm on their own and harvest the yield farming governance token, sell it, restake it and stuff, and so a vault basically socializes this cost among a much bigger group of depositors. And so there's like the gas savings, but I guess there's also sort of like the know-how that is required for like doing that. I guess it's a bit more complex to do these option strategies, right? Or do you think it's super easy to execute them by your own?
No, I mean, I think if you go and tell like I I don't know, like my parents to go run an option strategy. They wouldn't be able to do
Exactly.
it. So yeah, I
Most
think
people don't even know what an option is, so let alone
yeah.
running an option strategy.
So I think you are right that like a huge motivation of what we do is to simplify these things to make it very, very intuitive for people. So on our website, I think we have just spent so much time thinking about the language, about the visuals of how easy it is to get into one of these strategies. But yeah, I think back to your point, running one of these strategies is not just like deposit, farm, sell, deposit, farm, sell kind of thing. You actually have to think about like strike prices and expiries and all sorts of stuff. So our vaults do all of that for you. You literally deposit once and maybe you come back in 6 months and withdraw. So yeah, that's how I think that to me is the biggest value proposition, to be honest.
Yeah, no, for sure. Let's open. I have here a tab with the Ribbon Finance app open. Wait, I'll share it. As you say, it's quite beautiful. I
Thank
love
you.
also how you describe what's the strategy that runs. And here, for example, we have a ETH put selling strategy. So that means that this vault basically sells put options every week.
Yep.
And every week, if the price of ETH doesn't fall under some specific weekly threshold, the vault makes a profit.
Money.
Right?
Yep. Exactly.
And then that yield that is generated is reinvested into the vault, and so obviously it's used also in the next week to sell more of these options.
Yep. So it's like auto compounded. You get these yields back and you reinvest it next week. And yeah, I mean, the numbers can get pretty crazy if you compound them. But obviously it depends on whether ETH is super volatile. I think the best case is like if ETH has been just ranging like now, our vaults have been doing very well because ETH has just been trading between like, I don't know, 2.5K and 3K. Yeah.
Yeah, and so for example, I also love that you can actually see the options that the vault has sold in this case.
Yep.
And here, for example, the most recent one was a put option, obviously, with a strike price of 1,900.
Yep.
So that this vault would have made a loss if ETH will, I don't know when this option expires, on the 11th, so in 2 days. If ETH is below that price, then the vault loses. But so far it's looking good since I think we're at 2,500, unless the market has crashed since we talked. But okay, so and in that case, it will make a profit.
Yep. So it actually, the vault actually realizes the profit upfront, and the next at expiry, if ETH is below 1.9K, the vault takes a loss. So I think, so just one tangent is like, I find funny, people come into our Discord and they're like, is this free money? Is this like a yield farm where you can get 100% APY for free? And I'm just like, that doesn't like exist. There are reasons why 100% APY is just like not sustainable. And obviously the only way we can get high yields is because you are selling some risk in this case. So yes, you do have like you can lose your money by using our vaults, but I think that is the trade-off that you have to make if you want to make high yields in a sustainable way. So that's how I think about it.
There's no free lunch in finance, right? If there was 100% guaranteed yield, everyone would do it. But yeah, so here the risk is that that the price of ETH like crashes. And if it happens once, I guess it's not too bad because it's kind of priced in or expected. But if it happens every week, then it would be bad.
Yeah, so I mean, I think what the vault does is like the vault sells weekly options so that it can adjust every week. Like, let's say ETH crashes to $1,000 tomorrow. the next put option that the vault will sell next week would be like $500 or something. So it makes changes every single week, and it moves with the market instead of like doing longer dated things where it's like I sell a put in a year, because there's just so much uncertainty between now and a year. I think people like the fact that the vault adjusts every week.
Yeah. Okay. So there will be no vault selling monthly or yearly option, because it doesn't make sense. It's really this, and also it makes less sense for a user to automate this since there's less repetition involved, right?
Exactly. And I think people just don't really want it, to be honest. At least from what we have seen, like I don't really want to do monthly options or yearly options.
And so I saw that you wrote in the description here in the risk section that such a situation where the price of ETH falls below the strike price of that week, it's expected to happen less than 5% of the time. How do you derive that number?
So we did like backtest on these strategies, and for example, this strategy out of sells options which are like less than 25%, like today's price minus 25% every week. That's sort of a rough guideline of what the vault does. And from the backtest, we have seen like these minus 25% or more scenarios don't happen very often. Maybe they happen 1 or 2 weeks a year or something. So that's how we got that number. I think things have just changed a lot. Like the market has just transformed a lot in the last year. So by no means is this like a predictive number at all. I think it's just like a rough guideline of thinking, how often do these quote unquote black swans happen? And they are pretty rare.
So it's basically past volatility is not 100% indicative of future volatility, of course, but that's like what the back tests have shown. And if we assume that the markets mature or continue to mature, volatility should reduce over time and not increase.
Yeah, I mean, we hope so, but I mean, it's 2021. There are all like people have been saying, okay, there are all these derivatives now. Maybe volatility is a bit more controlled than it was in 2018. But we just had like a 60-70% drop in a week. So maybe the whole market is still pretty immature.
And so talking about yields and performance. So I see here there's the vault performance is negative 11%, and then the projected yield is positive 64%. So is it the case that this like we've been very unlucky so far, and that we've run in some of these edge cases, these 5% edge cases so far?
Specifically has been doing well every week, except that 1 week where ETH collapsed by 60%. So that 1 week sort of accounted for all the losses that the vault has made so far. On average, this vault has made about 1% a week, and in that 1 week itself, it lost like 12%. So I mean, I think it is pretty objective. Like it is like a pretty rare event for ETH to collapse that much. But we hope if ETH continues to be a bit more calm in the next month or two, this vault will probably recoup the losses. So some of the good things, I guess, like people who have come in, who have become depositors after that event, have just been making a lot of money. So that's great for them. But unfortunately, if you were depositing before the huge crash happened, you would have lost some money.
Yeah, and I mean, it's only been running for a couple of weeks. So I mean, 2 weeks where something negative happened was enough to bring the yield down so much. But
it was actually just 1 week. It's crazy how
1 week.
Just that one event sort of created so much losses. But that is like the risk of option selling in general. The calculus that you have to do in your mind is just like, maybe you hope that the expected value over a long period of time, these steady gains will offset, will be basically greater than like potentials for these tail events. And I mean, we did like a backtest that we published on a different product, and historically, yes, maybe it is possible that the EV of these things are positive. But again, these things are never predictive, so I don't really consider them as like investment advice at all.
Yeah, better to stay away from giving investment advice. Let's look at the other products, right? So we just discussed the USDC put selling vault, and then you have a Bitcoin call selling vault and a ETH call selling vault.
Yep.
So without going crazy into detail of into any of these, what would you say are the different risk profiles of these vaults, and like could you generalize and say, if you're a user who has that profile and that view on the market, you should go here, and if you're more like that, you should go there. Is that possible, or is it just too complex?
It's not possible. I think this was actually the first product we launched, and so I still consider it like a flagship product, which is just one of the easiest ways to stack ETH over time in DeFi. So we have this classification of people called, I like to think of them as like ETH maxis. Like, they don't care what the ETH USD price is. Like, I don't care if ETH is $100 or 10K. I just want to have more ETH. And this vault is actually perfect for people like that, because it doesn't like protect you against any downside. So how this vault works, basically it says, if ETH moons like crazy in the next week, you might have to sell some ETH early for USD. So for example, can you go scroll down a bit and see the strike price?
Yeah.
You can scroll up. Sorry, it's like the second section. Up. A bit more.
Oh yeah. Here?
Yep. So I can't read. Is that 360?
It's 3,000. Yeah, that's right.
Cool.
Yeah.
So yeah, this vault says if ETH like giga pumps to 3.6K, this vault will basically sell your ETH at 3.6K. So if ETH reaches like 4K by Friday in 2 days, you would have missed out on like $400 of profit. But psychologically, it's great because maybe you don't mind taking some profit on the way up. That's how we think of this vault, and that's why I think this has been one of the most popular ones, because the quote unquote downside scenario is it only happens when ETH does really well. And
so you're always up in USD terms.
Yes, if you get exercised, basically it means that ETH has really mooned like crazy, and you would have ended up with more USD anyway. So it's become a bit of a meme, but yeah, that is like the value proposition of this product. And
And so this is the one for ETH maxis.
Yeah. So for example, if you deposit 1 ETH and ETH goes down to $100, this vault isn't going to protect you from that downside. In your mind, you're just denominating in ETH and you're just hoping to stack more ETH over time.
So I guess Anthony Sassano is in that vault.
I don't know. Hopefully.
No, I saw that he's a Ribbon fan. But yeah, no, super cool. I'm in both actually. But yeah, and so who sells these? No, who buys these options that the vault sells to? Is it one actor, or is it just like in a public marketplace?
Yeah. So right now, for these vaults to earn yield, they have to sell these options, and for this vault to sell options, there has to be a buyer that's actually paying you the yield. Again, this is not like free unicorn money that we are printing. So like it actually has to be rooted in real money coming in to the system from someone else. And right now, yes, we do partner with a few market maker firms who are like huge option traders, and they are willing to buy these. They're willing to take the opposite side of these trades. So right now we're actually working with 2 market makers, Orthogonal Trading and Ledger Prime. They're one of the bigger option traders. And yeah, we basically have an agreement with them, and they are willing to just buy up all of the options from these vaults every week.
Gotcha. And
sorry, go ahead. Yeah, so I mean, we plan to change the system in V2, but we can talk about that a little later on.
Yeah, I was just going to ask. So, how is this scalable? If today the vaults have like 30 million TVL, I think, but imagine they get to 200 million or 500 million TVL, then I guess there's only a limited capacity of these market makers to absorb all these options, right? So do you have any ideas on how you want to scale beyond those two market makers?
Yeah, so one of the key features of V2 is basically these options would get sold every week via an auction. So anyone in the world can participate. If you are like a crazy gambler, you could buy these options from the vaults. If you are like we are gonna get our current market makers to also participate in these options. But I mean, we think that's like the most scalable way because anyone in the entire world can participate in the opposite side of these vaults. Right now, I think because we didn't even know if people wanted this product, we felt like it would be easier if we just partnered with a few firms just to test out product market fit for the first, 6 months, and then sort of think about a longer term strategy. And yes, I think in our V2, huge focus is basically how do we open up the opposite side of the market to anyone in the world.
Yeah, it's super cool. So these market makers will continue to participate, but many additional players can also participate in these buy these options.
Yeah.
And will you continue to use exclusively Opin as a marketplace to mint these options, or are there other option platforms as well?
So I think that's like one of the most common questions we get, and basically what we use Open for is infrastructure to mint these option tokens, which are called O tokens, and the infrastructure to exercise them if it expires in the money. So we don't really use like their order books, we don't use their liquidity, we don't use anything else that they have built. We just use the ability to mint and redeem these O tokens. Right now, I think they have been great partners. Using the infrastructure gives us everything we want. So I don't see a need to change, but our infrastructure does let us sort of be flexible on the underlying option layer that we use. But for now, they are sort of the ideal partner just because it offers so much flexibility on what the vault wants to do.
And so these O tokens, what is it that they uniquely enable you to do? Is it like, or like what functionality do they bring you? Is it like the whole settlement that is encoded into these tokens and the connection to an oracle, or is it?
No, that's exactly it. So if you own one of these O tokens, it's basically equivalent to owning an option, and they handle the oracle side of things. If it expires in the money, holders of these O tokens can go and redeem. So all that settlement infrastructure is handled by them. We are more like an app layer on top of we use Open to compose these products and make it simple for people to use.
It's a beautiful example again of how composable DeFi is. And they must be super happy because you bring a lot of, volume to them. But you said you don't use their order book, but do they benefit in some way from that integration?
Yeah, I mean, they also just benefit from like TVL because for like our vaults literally take all the assets, create these option tokens, and in the process, our TVL moves into their vaults. So they do benefit from TVL growth. And I think, if they are trying to become like base layer option protocol, maybe that's all they care about. Just like how many apps are using us kind of thing.
Cool. Let's take some questions from the chat. First of all, thanks for the awesome podcast comment. Then there's a question. are you going to collab with AP Wine on principal preservation with the upfront yield? I guess that's Antoine asking. Do you want to take that one, or like maybe?
So,
and if you know the project, maybe also quickly explain what the significance there is.
I somewhat understand the project briefly, but I don't know. My understanding of it is like it's a way for you to split out like a principal token and a yield token, which is like what a few projects are doing now, if I'm not wrong. So if that's the case, I think one of the very interesting structured products that I think are going to become very popular in the next 6 to 12 months is this idea of like principal protected products. So how it works is kind of crazy. It is sort of like you have an asset, you lend it out on Yearn, for example, and you get back some yield. You take that yield and you buy like a put option that protects your downside. But because you're using future yield to buy these put options, you're basically getting the put option for free. So we think that's like a huge category, and any project that allows you to like split future yield from principal, you can use the future yield today by buying the put options. So
wow, that's really cool, but also very advanced. My head hurts.
The two, like the one liner is basically you get free insurance because your insurance is paid for by your yield, and I think that's like a very catchy phrase, and we definitely plan to build it. It's just like on the list of priorities.
What else is coming with V2 that you mentioned before?
Yeah, so the main focus of V2 is sort of just on decentralization and decentralizing what we currently have. So the 2 points of centralization of our current products are, first, the strike selection. Right now, every vault has a manager which selects like these strike prices every single week. And the second point of centralization is like these partnerships with market makers, and they are whitelisted. They are the only parties who can take the opposite side. So these are the two centralization points. And as I mentioned, we sort of went with this approach because we just wanted to test product market fit first. And in V2, how we plan to solve both of these things is the first, strike selection. Instead of having a human decide what strike prices to choose every single week, the vault would literally choose it on its own, and the strike selection methodology would be in solidity in the contract itself. So it runs on its own. There's no human telling it what to do. The strategy is literally baked into the contract.
Wow, that sounds amazing, but also risky. If there's an error, but like I guess it's an algorithm. Like how does it, like what information does it take into account in order to select the right strike price?
Yeah, so I think this sort of leads on to a lot of interesting things, but the simplest example is like maybe the vault just says we are going to sell out of the money calls, which are 20% higher than today's price every Friday. That's simple enough for a vault to understand, like a contract to understand. It just needs to pull a Chainlink Oracle feed plus 20%, and that's the strike price it needs to sell. But it could get a lot more complex where maybe instead of just looking at prices, it looks at volatility. So that could be like another Oracle that feeds into this contract. And maybe the strategy could say like, okay, if price is X and if volatility is Y, strike would be something else. So that's pretty, we are trying to make it extensible so that anyone can build their own strategies kind of thing. But we are most likely just going to start with like the simple version, which is just like, yeah, pick today's price plus 25%.
Yeah, sounds good enough. Okay, and yeah, you also recently launched your governance token, right?
Yep.
RBN. How did that go? And also, if you could talk about the airdrop and how you selected recipients, I would love to hear the story again.
Yeah. So first, I think what we plan to do, because of this whole V2 strategy, like the human intervention becomes a lot more minimal. And because of that, I think it makes sense for some sort of governance system to decide, okay, what kind of strategy should this vault run? Like, should we upgrade the strategy for everyone? That should be something that governance decides, because it's not a human decision anymore that we make.
Yeah.
So we think it ties into V2 very well, and we felt like we just aspire to be more community owned versus like we built something by ourselves for a year. And maybe by that time, like if we do very well, all the upside has been gone. So we do want to sort of open up ownership in this project as early as possible, and that's why we launched it. So first and foremost, I think right now RBN is just going to be a governance token, and we have put up 2 proposals recently. So the most recent one is like, okay, we proposed this liquidity mining program, and we're trying to get our community to be active in governance and so train this governance muscle so that there's some utility for the RBN token. But I mean, I think in the future, it could evolve in just so many ways that I don't know yet. And that's sort of TBD based on where people feel like the project should go. And sort of because of that, I think we wanted to bootstrap like a decent governance set on day one. So we did think a lot about like Airdrop, and we were thinking about, okay, how do we actually get people who are interested in this project to become early governance members? I personally was like really pissed off or like annoyed by all these projects who are just like, okay, drop your ETH address here, we'll give you coins. Like that's so stupid, because it's just like people would just auto dump. Like they tell you to retweet this thing and you get free coins, but those people are just gonna insta sell, and it doesn't bring like a single dollar of value, I think.
I mean, I guess they only do it to get like Twitter followers or something.
Yeah, and I mean, I really don't think that leads to any long-term health of the project, to be honest.
No, definitely not. And you're also attracting the worst kind of
wrong, exactly,
holders, basically. Yeah.
So yeah, we did spend like a shit ton of time thinking about like how do we get the right people, and we did 3 big things in the airdrop, which I think were very well thought through. I like to think. The first one is like the most obvious, which is the classic retroactive airdrop where you give your users coins. They have been following your project from early on. Maybe they deserve something for being early adopters. And also maybe you have a hunch that maybe your early adopters are people who would be interested long-term as well. So I think it's a pretty good idea. But one thing we did specific for the early adopters was, instead of giving out these coins like linearly to everyone, we actually applied like a transformation so that the whales get less and the smaller depositors get more. And I think people really appreciated that, because if we did like a regular linear distribution, like 3 addresses would have gotten a shit ton of coins. But because we applied this, I think the smaller depositors had like a much bigger airdrop, and the whales got less, which is great. Especially if you're thinking about governance, we don't want 3 people control the protocol. So that was the first.
Because those votes filled up immediately, right? They had a cap at the beginning, and I think 2 minutes in, it was full. So it must have been a couple of whales really, putting it all in.
That was the first thing. Like we just looked at the distribution and we felt like, how do we sort of tailor this to benefit the smaller people who maybe don't have 1,000 ETH lying around? That was the first thing we did. The second thing we did, which was slightly unique, was we actually airdropped to different communities. So if you were like a Hedgic LP, or if you were like an open option seller, we felt like these are people who are already comfortable with option selling. They understand the risks of what you can lose if you're an option seller, and maybe they would be great people as additions into our protocol and our project. So we did set aside like a small chunk of airdrop for these newcomers. who just wanted to learn about Ribbon for the first time. There was one other thing we did. And the third thing, which I think is the most interesting, was like this idea of like a Discord airdrop. One of the most organic things that we have seen so far is just like people being interested in the project, and they're also just very active in Discord. And we felt like the heart of the project was in the chat. So we wanted to reward those people who are very active. So what we did was like we wrote like this program to collect everyone's messages, and we filtered them out. And we said like, okay, if you have more than 5 messages, you are eligible for this thing. That filtered out so many people who come in once and say like when token and they just leave.
Yeah, so and then it continued, right? Like those people that had written more than 5 messages, they would then have to fill out a form.
Yep.
And in that form, they were faced with the question: do you want more RBN tokens, or do you want like a ribbon cap? Yeah. That's how you basically filtered out the greedy people versus the ones that really like the brand and the product, because those who selected the like more tokens, they got wrecked basically, and they got I don't know if they didn't get any or if they got like less, but at least they selected the wrong option. I thought this was really hilarious and smart.
Yeah, I mean, the motivation was just like, we looked at the people who are in this list of people who have sent more than 5 messages. And it's just clear, like some of them don't give a single shit about the project. They just want free coins. Maybe they just happen to send 5 messages. And we wanted to filter for that. If we were really trying to be thoughtful about governance and people who we really want to reward, why the heck would we reward someone who just comes in and says random shit? So this like was like a trap where it's like, okay, if you actually care about the project and you're familiar with like all the memes and all the community, you would probably pick the merch because it's like a really funny meme and so on. I think that worked pretty well. The people who ended up choosing that option were people who have the highest messages in Discord, who are like super active, who are really like the core members of the Discord. We sort of felt like those are the type of people who we want to reward. Those are the type of people who are most likely going to be very active in the governance. Let's give them a lot. So that's how we did it.
I was really happy because I for the first time I ticked all 3 boxes. I was like LPing on Hedgig. I had deposited into the vault, and I had also written in the Discord, but I didn't see the form, so I didn't fill it out. But in the end, it's okay because I would probably have selected the more tokens and not the hat. So it's all good. No, and how's it turning out with the governance participation? Because my observation in DeFi is that like the more complicated a protocol gets, like for users to understand basically, and I would imagine that options would fall into that category, like the less participation you will have from quote unquote normies. Are you observing a lot of participation, useful contributions, especially if you go to the decentralized model in V2 where like all the important parameters will be set by governance? I guess it's important to have these community members.
No, I do think your observation is right. But I think we counteracted that by just creating this airdrop distribution so that the people who already know a lot about options end up getting more. So we just completed the first vote 2 weeks ago or last week, I don't even remember. And like the turnout was amazing. I think it was like 30% of the circulating supply voted. That's not bad. I think, I'm not 100% sure on the numbers, but I think it's in that ballpark. And this second proposal, I think I'm pretty happy that so many people have chimed in with their own thoughts about how we are doing things. It does get a little bit crazy because everyone has like a view. And I think my new job is like herding everyone and getting everyone to consensus on what's good for everyone.
It's an important skill.
No, it's like my new job is just telling people like, no, getting more coins for free is not good for the long-term health of the protocol. Like, we should be thinking about, I don't know, good long-term health of how we give out tokens instead of giving out like a shit ton to like 5 people. So
for sure. And yeah, talking about these first governance proposals, one of them was about introducing liquidity mining into the project. So right now the yields, and it's funny actually. I was showing the app to a friend yesterday, and I was showing the yields, and then I was talking about the liquidity mining coming on, and he was like, "Wait, the 70% is without liquidity mining." So the yields are going to become better. Tell us what's the idea about the behind the liquidity mining.
So before I talk about that, a few points is just like, we have been so trained to think like you can only get high yields from free coins. But turns out that if you actually sell risk, if you actually do something that's not risk-free, like farming, you can actually get high yields, but you do have a bit of risk. So that's how we sort of get pretty high yields, I would guess. And the second thing I want to say was our tokens are not tradable right now. So you cannot really think of them as like yield because you don't know how much they're worth. We just felt like when we announced this airdrop thing, we got a huge new inbound of users, but they missed out on the airdrop, so they don't have any coins and they have no say in anything. So we felt like, okay, let's somehow try and think of a way for the newcomers to get some RBN. And one of the classic ways is just through some sort of liquidity mining program. What we proposed was like a very small experiment. It's like a 1-month experiment where we give out 1% of the tokens. That was the proposal. And yeah, I mean, people still have to vote on it. We don't know if it's going to pass yet, but I would see this more as like an experiment, and we really are very interested in seeing, okay, once we turn this program off, does everyone just leave? If so, that's like a bad program. But if like 50% of the capital stays, that's amazing. Like that really proves the product market fit and the stickiness of the actual products without this free incentives. So,
and we talked about the limited capacity of market makers to absorb like all the options that the vault is selling, and you said that V2 will improve on this because it's decentralizing everything, and it will be a public auction that anyone can participate in. But if you introduce liquidity mining like now before V2, are you worried that the TVL will just like spike too much that you can't like cope with it?
Yeah, so because of that, we are still going to keep some of our caps on, like the deposit caps, but we're going to raise it by a bit, but we're not going to remove it altogether, because I think we have seen projects where like Big Data Protocol and some others where TVL goes from 0 to like 4 billion back to 0 in like 2 weeks. And that's like a stupid, like that's just bad for everyone. So we are keeping it conservative. We are not trying to pump like our TVL numbers for 2 weeks. So we are keeping the caps on, we are keeping the brakes on, and yeah, we just hope some new people can earn more RBN, and we also want to collect this data on how many people stay after the program's done.
And the governance token, so you said it's it's valueless, but will it be transferable after this liquidity mining, or no? It's still like locked in. Yeah,
it's still non-transferable. I think when we think it's like the right time to make it transferable, maybe we can do like a RGP proposal to say like, okay, let's turn transfers on. But it still feels early, and I mean, these vaults have been live for less than 2 months, so it's still very early, and I mean, I think it's still TBD when trading is gonna happen.
Let's finish by taking a couple of the questions.
Cool.
There's one about competitors, and I think it's a good one because I was also wondering, do you imagine or envision that someone like Yearn, for example, could also add this to Yearn, or do you think it's too specialized? Like you've built like kind of a mode in this area, or Yearn or others, right? Doesn't need to be Yearn.
So we are like huge fans of Yearn, and maybe I'll preface this by saying our next product, which I think is going to be extremely exciting, it basically combines Yearn and one of our vaults. So you can earn your Yearn yield and our yield at the same time.
Wow.
So we think that's like going to be a game changer. So we are big fans of them, and yeah, we like them a lot. But how I personally think of it is like, they are really, really specialized in DeFi native ways of yield generation, whether it's like borrowing from Maker and putting it in another vault that does something else and doing all this crazy shit. And I think we are much more focused on like yield generation through financial products, not so much like DeFi specific things. So that's how I see it. There are actually a few new projects now which are like trying to, I do think the whole industry will tend towards our direction and use more like financial instruments to generate yield versus like farming. So I do think there will be new people coming into that sector, but I think we are the first ones, and I don't really see much competition yet, to be honest.
And so you said you would integrate with Yearn in a future product, and deploy some of the capital there. So use like yield and the yield is generated through the option selling strategies. Is that like the 10% buffer that you keep for withdrawals that is deposited, or the total?
It's the total. So it's a lot cooler. Basically, it's like right now the USDC put vault, you lock up USDC and you sell puts on ETH. In the future version, you lock up USDC, all the USDC sits in Yearn, and you write options on these Y tokens. So it's like so capital efficient. You're probably gonna like, it's like mind blowing almost. You can get yield from two places at the same time. That's also something we are gonna focus on in the next like 3 to 6 months. It's just like all these interest bearing things as collateral, and you get like double interest or everything. So that's a huge focus.
Someone mentioned also staked ETH instead of ETH.
Exactly.
There's one question. How are you going to quantify increased APY of a vault through liquidity mining if there's no valuation on the RBN token yet?
We are not. So on the UI, you're just going to see the regular yield that you get from the product, and you're going to see how many actual coins you're going to get, how many actual RBN you're going to get. So you are not going to have a sense on percent. You just have like a guess on how much you think is going to be worth at some point.
Exactly. You can like make your own guess on the valuation of Ribbon, fully diluted, and then calculate how much RBN tokens you're getting. Basically.
Yeah, I mean, I also like to think about it as like, it might be good. It might be an interesting way to incentivize just longer term holders, because maybe the people who want to accumulate now are not gonna insta dump because there's nowhere to dump it. So maybe the people who are going to participate in LM actually want to be RBN long-term holders.
Yeah, for sure. Will you marry me, Julian?
No.
Not here in the life, at least. Okay, let's finish with the silly ones. When Ribbon Rug and when R-Head liquid?
Our head's already liquid, but you have to convince one of the 64 people to sell them to you. There's this like really funny meme image that someone made of like a red like floor mat with like the Ribbon logo on it, but it just looks cool, and like maybe we should actually make that into a physical thing.
Yeah, it seems like people like the Ribbon merchandise. Shout out
to Lol DeFi, who's been helping us with all this stuff.
Yeah, he's amazing. Really cool merch. Okay, thanks so much, Julian. I really love this conversation. Super interesting. and yeah, even more bullish on Ribbon than before, and looking forward to V2.
Cool. Thanks, dude.